Hi traders, you're welcome back to the Forex Geek channel, and I especially welcome you to this video. So in this video we are going to be taking a deep dive into the 5-0 pattern. Okay, so I'm just going to be writing it here. The 5-0 pattern. All right, we're going to be looking at that in this particular video. Okay, so now this is one of the lesser known yet effective harmonic patterns in Forex trading. Okay, this unique pattern can help you identify key reversal points, and if used properly, it could become an essential tool in your trading strategy. So if you're ready to learn all about the 5-0 pattern, hit that like button and let's get started. All right, and don't forget, subscribe to this channel so that you don't miss out on more trading insights. Okay, all right, now the 5-0 pattern is part of the harmonic trading family, okay, which includes other patterns you might be familiar with, like the Gartley pattern, the bat pattern, and the butterfly pattern. You might want to check out previous videos where we covered these harmonic patterns, okay? But what sets the 5-0 pattern apart is its precise structure and Fibonacci levels, okay? That makes it particularly reliable for spotting potential market reversals. Now, to understand this pattern, let's break it down into three main segments, and the segments are the XA leg. The XA leg, we have this as the X point, for example, and then we have this as the A point. So we have this as our XA leg. All right, so this becomes our XA leg. Okay, and then we have this as our point B. Okay, so we have this as our AB retracement. Okay, we have this as our AB retracement. All right, and then we have the BC extension. So we have this as our C point, right? And then we have this as our BC extension. All right, so this becomes our BC extension, and then each of these legs have specific measurements that need to be met, right, for the pattern to be valid. Now note that the pattern begins with the XA leg, which represents the initial move. This sets the stage for what will become a potential reversal setup. Okay, now here's where it gets interesting. The AB leg is required to retrace about 50% of the XA move. Okay, this is the first key measurement. All right, so if we are to use the Fibonacci retracement tool, okay, we will see that the AB leg in this case actually retraced more than 50%. In fact, it even got to the 78.6%. Okay, now in as much as sometimes the retracement might not exactly perfectly align with the the Fibonacci retracement level, but at least it should be really close. Okay, it should be really close. All right, now this is the first key measurement, and it's what gives the 5-0 pattern its name. So in order for us not to go in search of a pattern that would exactly be 50%, because ideally it should be 50% retracement. Okay, it's ideally should be 50% retracement, but in order to save time going to hunt for a pattern that will give us exactly 50%, let's just explain what this pattern is about using this as our example. Okay, I hope that is fine. All right, so if the retracement is off, it's not a true 5-0 pattern. Okay, so precision here is critical. That is the reason why this is not exactly the pattern, but I'm just using this to explain how it's supposed to look like. So ideally, it should retrace to about 50%. Okay. Now moving on to the BC leg, right? This part should extend up to 1.618 Fibonacci. Okay. Then this extension level is crucial as it signals a potential area for price to stall and reverse. By reaching this specific level, the market may be gearing up for a shift in momentum, indicating that a potential reversal point is close. Okay, so now let's look at a real chart. Let's just analyze this example. Let's analyze it even more closely. Okay, let's analyze this example more closely. You will see that the BC, and like I already said, that the XA is the initial move, the AB is just a retracement, and it's ideally supposed to be around the 50% retracement Fibonacci retracement level. Then the BC is more of an extension. All right, it's an extension, and ideally, yeah, it should go across the A. Okay, so now once these conditions are met, the final move, which is CD, okay, here we're gonna have our D points, right? And then here we're gonna have our CD leg. Okay, so we have our CD leg. So the final move, which is the CD, yeah, it often presents a promising entry point. As the D presents a promising entry point for those looking to capitalize on a reversal. So what makes the 5-0 pattern so popular amongst seasoned traders is that it allows for more precise entries with better risk management. Okay, by identifying these levels accurately, you can set tighter stop losses. Yeah, because once you have been able to identify these patterns effectively, and once you recognize that a reversal is about to start, for example, let's say we are going to be using a bearish candlestick pattern now, and then we notice that the price has broken above this bearish trend line, and then we even had a retest. So this would have been a great zone to enter a buy trade. This would have been a great zone to enter a buy trade after this breakout happened and even the retest. Okay, so we have entered a buy trade here. Stop loss should be set just below the breakout point, right? If you want a tight stop loss, so perhaps we could have considered setting stop loss maybe around here, which is just below this low. Okay, just below this low, it's a good point to set the stop loss. Then as for the take profit, we could have considered using the nearest resistance zone for our take profit. Perhaps this level would have been a great point for the take profit. And you see, we would have caught somewhere around 340 pips. Okay, so that was a good catch. All right. Now, if this information is helpful, please hit that like button and consider subscribing for more content like this. We dive deep into Forex strategies here on Forex Geek. The Forex Geek channel gives you a lot of information about Forex strategies, market insights, and advanced technical analysis to help you elevate your trading. Okay, so to recap, the 5-0 pattern is a harmonic structure that requires precision and understanding of Fibonacci ratios. Remember, the 50% retracement from X to A and the 1.618 extension in the BC leg are non-negotiable. Okay, so this pattern is a great addition to any trader's toolkit, especially for those looking to identify reversal points with greater accuracy. Thanks for watching, and make sure to join our community of traders by subscribing and hitting the notification bell. Keep practicing, stay focused, and I'll see you in the next video.